Okay, market numbers, not much has changed from the last we met. US market, so why I'm actually looking at US market and not Singapore? Basically, in terms of direction, they are quite correlated. So when US market go up, Singapore market go up, US market come down, Singapore market come down. The difference is actually in terms of quantum. So when US market go up, they go higher than Singapore. When US market come down, they come down more than Singapore. So I just use US market as a proxy. So like I said, why am I doing this? I try to understand the storyline. Okay, usually before I start, you can tell me this way, before I start planning, like what are the 5 stocks to look at, or what's my investment strategy for this month, I need to have a top-down approach. So I need to understand what is the market condition at this point in time. So what I'm actually seeing here is all-time high now. Of course, not a perfect moment. Okay, not a perfect moment. It seems like market is still very high. We talk in terms of risk. So will it come down, will it go up? Okay, very hard to say lah. I think nobody can say that, oh, it's coming down, it's going up. But we can actually talk in terms of risk. So with this kind of picture, of course, the risk of it coming down is higher, given it's actually on the high side. Okay, but let's look at the numbers first before we come to a conclusion. So I just want to give you some background. Okay, let's look at my usual 2 numbers. So of course, from here you can say that now, okay, this is unemployment rate, US unemployment rate. But no, this is US unemployment rate. You can see that the US unemployment is actually quite low. So under normal circumstances, I should be happy lah. So given that unemployment rate is low. Okay, so of course, unemployment rate is good for the economy. But not for the US case, because for the US case, as you can see, if you actually use history as a guide, every time it actually go low, it will spike up. Go low, spike up, go low, spike up, go low, spike up. So in fact, my fear is there right now. Hey, okay, I'm definitely not a chartist, but I don't really like the shape of it now. Okay, so this is again something that trigger my radar, trigger my red flag. Hey, definitely not a good sign in my dictionary. So this is US unemployment rate. PMI stands for Purchases Managers Index. So it's a survey done to all the procurement managers to ask them, are they going to buy more or less raw material compared to last month, in this case. So if it's above 50, that means yes, expansionary, they're actually going to buy more. Below 50 means contractionally they're going to buy less. Also, in US case, it's actually quite a nice picture, actually. Okay, if not because of the history, I'll be very happy. I'll be very happy. Low unemployment, PMI above 50. So it's almost like a very nice scenario. So unfortunately, given that historically speaking, every time US unemployment go too low, it's time for us to get worried. So today I am actually not that bullish. Not that bullish. Okay. So same thing, I always look at 3 regions, US, China, and Euro, okay, for based on the fact that they are the largest economy. So for China unemployment rate, so statistically speaking, it's actually going up. Okay, of course, now we actually hear news of China not doing very well. So this number actually show, unemployment rate actually show. So if you were actually going to track the youth unemployment rate, it's actually quite scary. I think the last we saw is actually about 14% or something. It's a double digit, 13, 14%. So it's actually quite scary. So if you talk about overall unemployment, it's actually climbing. So not a nice picture for China yet. Same thing, interestingly, China PMI still above 50 is increasing. So it's actually not so bad. Okay, not like the other extreme, whereby wow, things are going down, things are sliding down, China is going downhill. No. So in fact, China PMI is still above 50. Okay. Again, if let's say this one come down, PMI above 50, I'll be very happy. So now one up, one down is like, it's not a clear picture. Definitely not a case to celebrate. Definitely not a case to throw all my money to the stock market. At the same time, it's also no cause for serious worry lah. Okay, so this is what I'm actually getting so far. Okay, euro unemployment is actually coming down. Okay, so this period quite interesting lah. So for every of the nations got one good, one bad, one good, one bad, one bad. So like, of course, in this case, euro unemployment come down is actually quite good, quite good. Okay, but unfortunately, look at the PMI. It's quite scary. Can you see? I'm not too sure what is happening in euro area right now, but it actually dropped to quite significant drop to 45. So they are actually contracting. So this is the first part of my market update, looking at numbers. So just from all these charts, what I am gathering is, we don't have a nice situation whereby everything going up, unemployment is down, PMI is up. Nope, we don't have that scenario. At the same time, it's also not in a scenario whereby, everything is coming down or crash is coming. No. So it's more like, it's cruising, neither good nor really bad. But there are some cause of worry. Then is to actually look at the market news. Okay, so far, I realized that the news that really moved the market is actually still the Fed rate. So for those who have noticed, I think just last week, US have the Fed have their FOMC meeting, whereby they have decided to hold the key rate steady. Then market shoot up like crazy. Okay, market went up. So, yep. We are actually still very sensitive to the news of the interest rates and inflation. So apparently, US is actually holding the key rate steady, a good news to the market. And at the same time, they are projecting 3 rate cuts. Okay, just in case you're wondering whether, this year's election year, I think they're going to election in November. I got a feeling Trump is coming back. Anyway, we shall see. So just in case you're wondering whether during election year, is the stock market actually getting better or worse off? I had the impression that during election year, market is better. Interestingly, I just go and Google a bit whether during election year, statistically speaking, do you have is it better for the stock market? So the answer is no. But of course, so they actually did this research that actually says that stocks return don't tend to differ much in the election year. So during election year, market went up by 7.5, where non-election year on average went by 8%. So it's not particularly significant to have market went up. Also, for those who think that, because of election, we expect stock market to go up, prop up. So at least based on research, that is not going to be the case. That's not going to be the case. I do thought that there's some psychology effect. So it's like, election and change is coming. When there's change, people tends to be more optimistic. Okay, most of the time, people always think that change is always for the better. Also, there's change is always good. So when they tend to be more optimistic, they actually will buy into the stock market. That's what I personally thought. Okay, but of course, please look at statistics. I think we should be more objective. Okay, I think statistics is the best form. Okay, so this year, don't expect any, at least as per this article, don't expect any upward push of the market due to election. Okay, now let's look at China. So of course, China is the recovery going to happen in 2024. So based on some articles, so this is SCMP, South China Morning Post. So the Chinese economy recovery on track at the start, but property remains a big problem. So apparently they actually see some green shoots already. Manufacturing and consumption gradual rebound, investment growth, industrial output beat market expectation in combined data for Jan and Feb. However, recovery in Chinese economy could be short-lived if property market continue to drag. They say after year-on-year investment fell by 9%. So this is actually what I got from SCMP. just a matter of time. I personally is not so optimistic that 2024 we see it coming back. But I am sure, it's just a matter of time. Okay. So that is what I personally do when the market update. Like I said, two things. Look at the numbers, unemployment and PMI for the three big economies, the China, the US, and the Euro. Okay, then after that, I just go and scan through any significant news. And then I sort of have a backdrop for my stock pick. Okay. So the question that I really want to ask here is this. So now we are here using US as proxy. The question is, can it continue to run up? My first impression is based on the numbers, the unemployment and the PMI. So for unemployment, like I said, especially the one that holding me back is the US unemployment. I'm getting very jittery. So this one. Okay, this one, I am getting very jittery. Okay, my gut is telling me that, hey, it's definitely not the time to put in the money. Also this one, and of course, the rest, I don't see a very strong indicator to push the market up. Okay, so China is also not say very fantastic. Euro, you have PMI coming down. So I believe, it's quite fragile here. So personally, I'm waiting for a slight dip before deploying my growth funds. I'm looking for this point to dip before I deploy my growth funds. So growth funds are basic ad hoc funds. I will only put in to buy growth stocks when I see the market timing is right. So I do foresee that, the market is going to correct a bit. I don't see it like a huge drop. I really hope not, and I doubt it's going to be a huge drop. I see it's a dip. Probably maybe something like this, what happened last year. Okay, from about July to October, something like a dip, and before it bounced back up. So I'm actually waiting for that dip before I take a further action.